This year, government has proposed a raft of amendments of 5 acts in Uganda's tax code. This month, some of the bills, including the Stamp Duty Amendment Bill 2024, the Value-Added Tax Amendment Bill 2024, and Excise Duty Amendment Bill have already been passed. To several observers, the Excise Duty Amendment Bill, which introduced additional 100 shillings of tax on diesel and petrol and 300 shillings on paraffin, need critical consideration.
Today, we already have a high expense, higher prices on fuel. Now you are introducing another tax on fuel. Now, what do you want people to pay for? What will people eat? Because the price of food is a function of the price of fuel. So what will happen? The trees are being cut, and you're increasing a tax on fuel. What will happen? Don't you think people are going to go back and even the leisure trees or the flowers, they will cut them and make charcoal? And at the end of the day, we shall have no green.
Once effected, the Excise Duty Amendment Bill will push the tax on diesel and petrol to 1,550 shillings from 1,450 shillings. Those in the real estate sector are also wary of the amendments targeted at building materials and property transactions, including land.
Triggering growth, one, it means that we must be careful in how we tax the sector and how we incentivize the sector. One, in order to attract foreign direct investment or even domestic investment, people must be seeing an opportunity to make a fair return. And to make that fair return, it means you must give them incentives to do so. Now, from the developer's point of view, they would want utilities to be extended into their sites where they're building. Let the water be extended there. Let the power lines be extended there. Let the land be available in a pool. For example, if we have an investor who wants to do real estate development for mass production, 2,000 units of apartments or stuff like that, let's how to call private-public partnership. Land, water, power, so that you cushion down the cost, and that will be reflected in the price of the single unit at the end of the day. If you see a sector that has a huge multiplier effect on other sectors, you can actually benchmark yourself on taking advantage of the other multiplier tax opportunities than direct taxing the sector and make people shy away. Because when they shy away, you lose all the taxes in the value chain. So my view is, someone who is thinking about this sector must know the multiplier effect and must know that actually it is a heartbeat to many things.
The proposed modifications include the introduction of 5% income tax on non-business assets, which among others include land in cities and municipalities and rental properties. To other pundits, however, how the mobilized resources are utilized matters the most.
I think we have got to put our priorities right. Today, emphasis should be put on expenditure control. Okay? However small a pipe may be, if it has no tap at the end, it will always drain a very big drum. In fact, to me, we need an amendment almost in every public sector document to emphasize the issue of accountability and the public expenditure control.